Good morning, everybody. Good morning, everybody. So we're going to start the Finance Committee meeting. So we're going to switch the order of the agenda because we're still waiting for our auditor to join us. So I want to talk about it's the recap program. I'm not sure if you're familiar with what that is, but this summer, Dr. Yannicone, Mr. Thorne, myself, were joined by representatives Matt Bradford and Napoleon Nelson at the old Enfield building. They wanted to tour the building, hear about the project that we were doing, and basically see if it was in alignment with some funding from the state for this project. So what the grant program does is it requires that the project is an acquisition or construction of a regional economic, cultural, civic, recreational, and historical improvement. It has to be about $1 million. And basically the process is that it has to go into the governor's budget. So it's a line item. It's one of the projects under this, the redevelopment authority. It's in their budget. So we actually got put in for $2 million. It's a 50% match. We had, if you recall, part of the bond funding for the high school project and this project was earmarked for the old Enfield. And we also earmarked about $3 million of fund balance to gap the project for funding. So if we are approved, once the governor budget goes through, then what would happen is we would get $2 million earmarked or whatever gets approved for us up to that amount to supplement the funding for this project. November 1st, they had a window. Usually spring is when this money comes through. And when we talk about this, they had a brief window that was open that we were able to get application through. So that was November 1st. So right now we're in for $2 million. So we're crossing our fingers that this is supplemental money that we'll get. So what this will be able to do is take the place of that, some of the money that we've earmarked in fund balance. So we'd be able to save that money and use the grant funding. I have confirmed with Dewey, who's the lead on the project, that they've worked with these types of projects. So we will be able to follow all guidelines. Obviously, the project has started. We're supposed to open bids very, very soon on the project. So that was a little bit of my concern when I talked to Dewey to make sure that if we got the funding, we'd be able to check all the boxes. And he said we were fine. They're very familiar with this. So right now everything's in and we're waiting for the state budget process to go through. So as updates come, Dr. Yannicone and myself will make sure that we keep you apprised of where we stand. Any questions?
That sounds fantastic.
Good. Okay, and Ron has joined us. So Katie gave me your pronunciation. So if I kill this, I'm so sorry, Ron. Ron Miniger. I believe everybody's familiar with Ron. He's been doing the district audit. So he is here to present our 2021 audit. So I'm going to turn it over to Ron. Ron, you need to unmute.
Thank you. I'm used to Teams meetings, not Zoom. Sorry about that. All right, so I had sent 2 PDF files. One is a complete set of the financial statements. And rather than have you guys flip back and forth, I also sent a second PDF that has the financial statement pages in the order that I'll present them.
Ron, that's the one I shared. I didn't share the full thing, so.
Oh, okay, good. All right, so let me start off by just giving you a brief overview of what the audit consists of. I know I've done this in the past, but this will be a nice refresher. So the financial statements themselves consist of 6 parts. You know, they're quite voluminous, so let me break that down. The first part in the front of the report, when you see that, will be management's discussion and analysis. That will be prepared by Kara. It's an executive summary of the audit. It also looks forward. Kara will compare some significant budget variances, and she'll pretty much just give an executive summary of the financial statement. So that's the first part. The second part are the fund financial statements. Governmental funds are presented on what's called a modified accrual basis. Now, that basically translates to meaning that it's on a cash basis, but includes some short-term receivables and payables. These are the financial statements that governments have had for decades, and those are the statements that management uses to manage their finances. The third part of the financial statements are called the government-wide financial statements. Those statements begin with the balances from the fund statements, and they add long-term assets such as capital assets or fixed assets, and long-term liabilities, which include the pension liability, your other post-employment benefits liability, and bonds payable. Now, about 20 years ago, the accounting powers to be added these second set of statements because users were asking to see statements that were comparable to business enterprises. And business enterprises include long-term assets and long-term liabilities. The fourth part of the financial statements are the notes, and they provide a lot of detail to support the numbers in the fund statements and the government-wide statements. The fifth part, now we're working towards the back of the audit report, is what's called required supplementary information. And we have schedules regarding the state pension and the other post-employment benefits plans. And then finally, in the very back of the financial statement will be the single audit section. And if a non-government entity receives $750,000 or more in federal financial assistance, and they expend that money during the school year, they're required to have what's called a single audit. Single meaning that you have your local auditor come in, audit the programs instead of several federal auditors coming in. Now, the audit itself consists of three components. One is the financial statement audit, which we'll be reviewing today. And I can tell you that you have an unmodified or clean opinion, as you have in the past. The second part deals with internal controls and compliance with laws, regulations, contracts, grant agreements. We have no material weaknesses and no instances of non-compliance. And the third part of the audit consists of a report on the single audit itself. So if we look at the first page on the PDF, that's the budgetary comparison statement for the general fund. And we start at the top. You can see that local source revenues is about $1.9 million higher than budget. And $1.4 million of that budget variance represents Act 511 taxes that were higher than budget. And we also have delinquent tax, real estate tax revenue that was about $600,000 higher than budget. They're the main variances there. All to the positive, so that's good. All positive numbers on the right-hand column represent good variances and negative, unfavorable variances. Now, the state source revenues were $875,000 lower than budget. Retirement, safe schools, and Social Security comprised most of that variance. Now, moving down the statement, you'll see total expenditures on the right-hand side was $4.1 million lower than budget. Transfers out total $314,375 to the food service fund. The food service fund has been running a deficit, and they've had a deficit fund balance for several years. Towards the bottom, we can see that the net change in fund balance is $4.9 million positive variance, and that represents an actual increase of $1.6 million versus budgeted decrease of $3.2 million. And that's typically the case. You budget conservatively. If you're going to err on one side or the other, you're going to err on the side of being conservative. Any questions on that budgetary comparison statement? At the bottom, you can see there's a $25.9 million ending fund balance. That includes an unassigned fund balance of $6.6 million. Now, just to give you an idea, I understand the district likes to target between 2 and 8% of budgeted expenditures. 2% of your budget expenditures would be $1.2 million. 8% would be $4.9 million. All right, if there's no questions on that budgetary comparison statement, we can flip down to the second page of the PDF file, and that is your statement of revenues and expenditures for governmental funds. Now, that statement includes the general fund, capital projects fund, and capital reserve funds. Now, we've already reviewed the general fund, so I'll point out the decrease in the fund balance of the capital projects fund of $3.4 million. So you had current year expenditures totaling $3.5 million for capital projects. And towards the bottom of that page, you'll see the other financing sources, $9,999,000 proceeds from the 2021 bond issue. Now, of course, you use that money to defease some old bonds, so you'll see money coming out as well. The capital reserve fund had a decrease of $55,000. Revenues totaled $4,000. Expenditures totaled $56,000. Any questions on that page? Okay. All right, if we flip to the following page, this is your balance sheet for the governmental funds. Now, if you look towards the bottom, you'll see the $25.9 million fund balance for the general fund. Now, that consists of cash and investments totaling $30.2 million, adds current assets, subtracts current liabilities. So your current liabilities are higher than your other current assets. So that's why you have cash and investments totaling $30 million, but a fund balance of just $25.9 million. Now at the bottom, you'll see a list of various fund balance assignments. Even though the district has a $25.9 million fund balance, much of that, all but $6 million, is earmarked for special purposes. And if you flip down to the fourth page of the PDF, I have an excerpt from the notes, note 11 fund balance in the middle of the page, and that lists all the components of the governmental fund balances as of June 30th. So in the general fund, you'll see some of that fund balance consists of prepaid expenditures. That's non-spendable. You've already spent the money. And you have a bunch of assignments there that management has approved to be assigned. Second line from the bottom, you can see the unassigned balance of $6.6 million for the general fund. Now, the fund balances for the capital projects fund and capital reserve fund were showing as restricted for capital projects. All right, flipping down to the fifth page of the handout, we have the statement of net position. Now, this you can think of as a balance sheet on the full accrual basis that is comparable to business enterprises. The governmental activities column represents those three governmental funds: general fund, capital projects, and capital reserve. The business type activity is the food service fund. Now, the biggest difference between this balance sheet and the governmental funds balance sheet is starting about halfway down on the assets section. You'll see land improvements, buildings and improvements, all the capital assets. And these are the carrying values net of accumulated depreciation for those capital assets. Under deferred outflows of resources, this is a category that's fairly new. I'd say about probably 5, 6, 7 years. Some changes in pension and other post-employment benefits. Some of those changes in those liabilities from year to year. What the actuaries do, they will forecast the payments that will be required to meet those obligations. They discount them back at present value as of June 30th. And you'll compare that to the assets that are held in trust. And that balance can fluctuate wildly due to changes in the discount rate and assumptions and other things. So rather than have that balance fluctuate wildly from year to year, what we'll see is a balance sheet item that will temporarily hold some of those fluctuations and amortize them over 5 years. So that's what this deferred outflows of resources is. You'll see the pension, $15 million in setting in a holding account that will be advertised into pension expense over the next 5 years, and a much smaller balance for the OPEB, which is other post-employment benefits. So it's not really an asset. It's just something that a cost that's going to be amortized over the next 5 years. Under the liability section, accounts payable, accrued salaries, you'll see that on the fund statements as well. But the long-term liabilities are only shown on this statement. And you'll see long-term liabilities split between the current portion. You have $5,123,000 of debt maturing in the next year. And then you have just over $100 million that will be payable in future years. Now you'll see that large net pension liability of $94 million, just under the total liabilities line. That is up from $87.2 million the year before. And that represents the district's share of the PSERS, overall PSERS liability statewide. And again, you have bonds payable totaling $106,000. You have other post-employment benefits totaling $4,369,000. That's up from $4.1 million last year. Now, because the district's share of pension liabilities is large, and this is across the board at all 500 school districts in Pennsylvania, you're showing a deficit financial position of $59.8 million. That doesn't mean that you're not going to have, you're going to run out of money. That's a very long-term snapshot of the district's net position as of June 30th that will presumably be made up, with changes in pension liabilities over the years.
I do have a question for you.
Sure.
That was actually really helpful to hear you talk through some of the changes versus prior year. Is there a view of the balance sheet that has a year-over-year view where we can see major variances?
There's not. We typically present just 1 year. Now, if management wanted to, we could add a comparative column to that, where we would show comparative totals. Typically don't show differences or variances. We could add yet another column that shows the net change from 2020 to 2021 if you'd like. I've done that for some other districts where we'll show comparative statements.
I mean, I think it would be helpful, particularly in some of the areas where there's major changes that we don't have control over.
Right.
Yeah, where you could, essentially help explain why there are major changes relative to the prior year.
Right. Yeah, we can absolutely add that column. And then part of the function of the management's discussion and analysis that Kara will prepare is to explain those type of things. You typically in the notes of the financial statements, you're not giving management's explanations of variances. That's done in the management's discussion and analysis. So in conjunction with that, when you'll read Kara's MD&A, and she will refer to comparative numbers. If we add comparative columns, then you'll be able to read that MD&A and look at the statements and see what she's referring to. So that's a good idea.
I think that would be helpful. Thank you.
Sure. Are there any other questions? I know this is a brief overview. Now, just some other things to point out. I will have a report that we're required to give to the board that will sort of give our executive summary. It talks about the accounting principles followed by the district, and the accounting principles are standard. When you look at the notes, the very first note will talk about the difference between the fund statements and the government-wide statements. I sort of broke that down into a quick summary. There's a lot of detail in the notes. So we'll briefly talk about that in the report. We'll talk about significant estimates. Significant estimates include the pension liabilities, the other post-employment benefits, depreciation of capital assets, those type of items. And we'll also briefly talk about the important disclosures in the notes, which would be bonds payable, pension liabilities, any other issues encountered during the audit. There were no other issues. Katie did a great job in assembling all the information for the audit. And Katie is the person that I work with on the day-to-day basis. We will highlight some significant dollar audit adjustments. We have included accruals for earned income taxes totaling $600,000 and delinquent real estate taxes totaling $230,000. And what I'm talking about here is under the modified accrual basis for the government statements, for the fund statements. They are not just prepared on a cash basis. You will accrue revenues earned as of June 30th, but received soon enough after the year end to pay liabilities that existed as of June 30th. So for example, you may have liabilities such as accounts payable recorded as of June 30th that you will have to liquidate within the next month or two. Now, the accounting powers to be define that period of availability as 60 days, not necessarily 30 days. You tend to think of 30 days for accounts payable, but the GASB, which is the Governmental Accounting Standards Board, allows accruals or actually compels you to accrue revenues earned as of June 30th and collected within 60 days. And that can help smooth out your fund balance. If you are just on the cash basis, you could, or not you, but any district could manipulate their ending fund balance. They could hold liabilities until July 1st and not record accounts payable. Or they could hold revenues. If you receive a large revenue on July 7th, that's really available to pay your liabilities as of June 30th. So, and that's really all I have. Are there any questions regarding the audit?
Just timing of next steps for when we will have the management review and full documentation.
Right, there are a few open items. We need to finish what the single audit, and I suspect we're going to have to look at some of those COVID-19 funds that came in. That will be done. I will be visiting the district next week to get that done. And we're waiting on some information. We need the legal letter from the solicitor regarding any possible contingencies. We need a statement from CPAST, your medical consortium, just for the government-wide statements. We don't need anything for the fund statements, but we're waiting on that information. In the government-wide statement and net position, we're carrying a balance of about $2 million that you have in reserves with CPAST. So that may change. And then once Kara puts together the MD&A, which is based on the information I just presented, then we can conclude the audit and issue the financial statements.
And once the financial statements are issued, we will be coming to the board. The action will be to accept the audit. We're anticipating that will be that meeting in December. So we're going to work to get everything done. That was one of the things. Unfortunately, this is Katie's last meeting with us because, as you know, she's transitioning. So that was one of the things we had talked about in her transition, is making sure that the audit, we had everything we needed so that Ron can do his thing and the firm can do their thing in getting us final audit drafts so we can get it accepted in December. So we will make sure that we are working diligently. I'll work Katie till the end to get so that we get that done.
Yeah, I'll be with Katie at the district next week just to wrap up that single audit part. And there's no problem issuing these statements for the December meeting.
So that'll be the board action. There's no action that will happen that will be needed out of this meeting for Tuesday's meeting. It'll just be the recap. Right.
And I should point out, I don't know if everyone remembers over the years when we started as the auditors, when I was with Dreslin, there were certain prior period adjustments we had to make in the first year. And what that means is we had to adjust the beginning fund balance for certain items that were done in error in prior years. And then we had certain findings throughout the years that had been whittled down. Last year was the first year we had no findings, and we have no findings again this year. So I think that's a testament to the progress that the district has made over the past several years. And again, Katie's done, from my perspective, she's done a great job with the audit.
Ron, we agree wholeheartedly. Karen and I have discussed this, and excuse me, I think the board knows we're so really sorry to see Katie go, but very glad that she's going to get the opportunity to lead as a VA at Eastern. So
well, and that makes me happy because I audit Eastern as well. So we'll have someone good
you'll have
there.
to be really careful, meticulous, thorough, bringing you information.
Right, right. And I look forward to working with Kara as well. I can tell you guys are in good hands just from a conversation I had with her.
Well, thank you very much, Ron. If there's no other questions, then that concludes the 2 agenda items that we had. At this time, we do not have a future meeting scheduled for finance. That will be most likely sometime February is what we're looking at, maybe January, so that we regroup after the holidays and we start to look at 22-23 budget. So if there's no other questions, we can adjourn the meeting.
Yeah, I do just want to take the opportunity, Katie, to thank you and congratulate you on your new position over at Eastern. So on behalf of the Finance Committee and the board, truly appreciate everything you've done. The audit, I think, stands as a testament to the diligence you put into everything. And your impact will be lasting. So thank you for everything you've done for the district.
Thank you very much. It's been great working with everybody here. I will miss everybody. These past couple of weeks, it's like so sad. I'm leaving. But thank you. Yes, I really, I strive to do the best that I could for this district and to get rid of those findings. I really did. So with the help of the business office staff and other staff around the district, we were able to get it done. So yeah, it's a really great thing.
Thank you, Katie. Congratulations.
Yes, congratulations and best wishes, and thank you for all you've done at the 11th hour to get us to this point and to move us forward. So again, thank you.
No problem. Thank you.
Okay, if there's nothing else, then we can adjourn the meeting.
All right. Thank you, everyone.
Thank you. Have a great day.
Thank you.
You too.
Take care.